satisfy their curiosity about mysteries. However, the success of commercial operation cannot hide the defect of its logical derivation. That is, it regards finance as the core of national strategy, and regards national strategy and enterprise strategy as the main contradiction of financial problems. It believes that this is the bullnose that governs financial and capital movements. The weight of conspiracy is gradually increased under this logical derivation. Conspiracy is characterized by suddenness, uncertainty, and unknowability. As a result, it is either a hammer or an anvil. Therefore, as long as the financial air supremacy is mastered, you can play with other governments and banks at will and plunder their wealth, thus integrating finance and conspiracy. Elevating to an unparalleled and supreme position gives the impression that countries are subject to others without engaging in finance, while engaging in finance is like plotting. This is a false proposition, and its arrogance violates the great taboo in the Chonji horse racing. Who would use their own bad horses to confront the rise of developed countries? The core of the national financial strategy is to take a distinctive differentiated path, give full play to the asymmetric advantage of resources, and avoid path dependence to turn air supremacy into self-destructive power. The characteristic of the theory of financial original sin is to deconstruct the new economic civilization based on the qualitative analysis of the times, and to address the confusion in the state of order. Conduct holographic full-dimensional research on various variables, attempting to find regular factors and provide new analytical coordinates for solving complex situations. In view of this, the Fokker think tank believes that finance is a comprehensive manifestation of became popular in countries such as India, emphasizing the government's control over currency flow, which became the mainstream opinion in academia, and most mathematicians were still advocating for free currency floating before this. At the same time, discussions about the financial explosion in China are also on the rise, with the mainstream view that China is at the center of the vortex and has a high probability of crisis. They are worried that China will be blown up and then destroyed. In fact, the current situation of China's finance is more aptly described as the financial explosion because it represents a long-awaited energy, and the process of ultimately entering the financial explosion can be controlled by the government. In the absence of a sound financial system in China, relevant departments will not easily loosen financial regulations. As a result, China's financial civilization will transition from the financial explosion to a controlled explosion. From the perspective of Chinese reality, industrial civilization and agricultural civilization are still ongoing, and information civilization is beginning to emerge. The financial industry, on the other hand, belongs to the model of strict national regulation and a conservative approach. At this moment, entering the financial civilization still requires several hurdles. The first is the effective grafting of financial civilization with industrial civilization, agricultural civilization, and information civilization. As China's economic development mainly depends on backward state-owned enterprises. The traditional economy civilization dominated by these state-owned enterprises is likely to be magnified in the financial civilization, and finally destroyed by the financial civilization. Once the country liberalized the private economy and the innovation vitality of the whole society, it is likely to enter a benign interaction state of the four civilizations. The second is the level of understanding of the game rules of financial civilization by relevant parties, and the degree of subversion of the wisdom of industrial civilization. For example, many experts believe that the phenomenon of nationwide stock trading is abnormal and a signal of the stock market reaching its peak, while officials from the State-Owned Assets Supervision and Administration Commission believe that nationwide stock trading is a great thing due to our limited knowledge. It is difficult to grasp it clearly within a limited time frame, regardless of the purpose for which this statement is made. At least it indicates that the management still allows room for discussion on new phenomena, rather than blindly denying them. China's hybrid finance effectively balances tolerance and control, and may dominate the next wave of financial civilization. China's closely following is not voluntary. The evolution of history has never been dominated by a single force, but rather the result of multiple factors intertwined and combined, as in the frenzy in the Chinese stock market that lasted for over a year between and is generally believed to be driven by multiple factors such as China's economy entering a take-off period, unexpected growth in corporate investment returns, successful stock reform, a surge in foreign exchange reserves caused by foreign trade surplus, and the influx of hot money and liquidity flooding used by the appreciation of the RMB. These reasons do indeed exist, but Foucault believes that these are only superficial and visible reasons. And in addition, they are also the fate of financial civilization. Originally the replacement of one new civilization with another old civilization meant a change in the original way of life and values. The countries or regions that first entered the new civilization will undoubtedly become the setters of new game rules and leaders of life changes due to the disruption of existing game rules. For example, the UK, which first entered the industrial civilization, and the United States, which first led the new economic civilization, not only won the highest end of the main industrial chains manufacturing it of various civilizations, but also made most developing countries follow their management concepts and development models. However, being able to enter a new civilization is indeed a fate and a natural result of various conditions. Now, under the condition of having the most, the United States have taken the lead in monopolizing the financial civilization. On the other hand, China clearly does not have the mature conditions to control financial civilization, but the objective existence of Chinese characteristics in the following aspects may be driving China unconsciously to follow closely into the door of financial civilization. Firstly, why China has objectively become the most open system. According to statistics from the Ministry of Commerce, as of China. A total of foreign invested enterprises have been approved for establishment, with an actual amount of foreign investment of billion US dollars. In terms of rate, the proportion of foreign investment stock to China's GDP in was percent, higher than the global average of percent. However, China's opening up to foreign capital is receiving risk education due to the structural transformation of foreign capital itself. Foreign capital is increasingly entering in the form of financial capital, leveraging China's vast resources in an asymmetric way of currency symbol that come and go freely. And for Liang Shift 1000 in foreign investment continuously acquired the equity of Chinese steel, banking, cement, beer and other enterprises with large sums of money. In just 4 months, 5 foreign institutions directly or indirectly invested in domestic cement-listed companies. However, to some extent, the influx of foreign financial capital, foreign financial institutions will also play a role of catfish effect, accelerating the process of China's financial reform, stimulating Chinese people's original investment awareness, indifference and numbness of the financial concept. Secondly, the currency position difference is too large. The price of a country's currency, also known as the exchange rate, is actually all domestic goods compared to US dollar assets. RMB assets undoubtedly have huge room for appreciation and speculation due to their total bid price. The essence of financial transactions is speculation, and places with stories will naturally attract international financial speculators. The consistent expectation or premeditation of RMB appreciation has caused excess global liquidity to accumulate in China on the one hand, settling on physical assets and resources such as real estate and stock market, triggering various RMB asset protection in China war. On the other hand, the excess funds are driving the innovation and development of financial derivatives such as stock index futures, options, commodity futures, etc., causing China's virtual economy and real economy to grow dually separate, because only through the development of financial derivatives can the connection with the domestic real economy be blocked, creating a space for international speculators to freely speculate and allowing excess currency to evaporate as much as possible, such as the rapidly developing derivatives market in the City of London after the financial bomb. May it avoid domestic real resources being hijacked by international financial capital. The anti-Japanese war itself and the development of the virtual economy mean that China is being pushed into the era of financial civilization by international speculators. Thirdly, the complexity of China's financial sector is very high. This complexity is mainly reflected in different types of A shares, B shares, H shares, etc. Parallel coexistence of stocks and their corresponding rules. The staggered operation of various investment mechanisms such as QFII and QDII. It may even form a coexistence pattern of multiple financial centers such as Hong Kong and Shanghai. However, on the one hand, Simpler things are less prone to errors, and more complex things are more likely to have vulnerabilities, which are easily exploited. At present, there is still a long way to go before the game rules in all aspects of China's financial sector are in place. The improvement of the game rules in the stock market itself and the establishment of rules in other financial markets, including futures, options, and other derivative markets,